regarding Ohio's unclaimed funds law and how to comply with it. Next slide, please. Ohio's unclaimed funds law was first enacted effective December 11th of 1967, but unclaimed funds law dates all the way back to feudal times, when land was held by a lord who would assign parcels or fiefdoms to families or clans. It was not at all uncommon for disease and famine to wipe out entire families. So who would take over the land? The most able-bodied barbarian? Most feudal lords emphatically said no to that. And so a sort of unclaimed funds or property law developed, which provided for the lands or goods to revert back to the lord to decide who is best able to take over the land, or locate a distant cousin to travel and assume control of it. Today, we're going to be talking about a number of different topics. You'll see under the history of unclaimed funds, we'll be talking about Ohio Revised Code, where you can find Ohio's unclaimed funds law in Chapter 169. We're going to be talking about the annual unclaimed funds reporting obligation for all potential holders of unclaimed funds. We're going to be talking about the corresponding reporting deadlines, about how to go about filing for an extension of your report, the consequences of not filing an unclaimed funds report. And then finally, the primary purpose of our webinar today is the voluntary compliance agreement. We're going to discuss the requirements for a voluntary compliance agreement, the corresponding benefits of entering into a voluntary compliance agreement with the division, the process, and the agreement itself. We are also going to provide you with a number of different resources to help you answer any questions that you might have and bring yourself into compliance with Ohio unclaimed funds law, and also be available to answer any questions that you might have. Next slide, please. So, why is there a division of unclaimed funds? As stated in the prior slide, Ohio unclaimed funds law was first enacted in December of 1967. The first unclaimed funds reports were due in Ohio from life insurance companies on May 1st of 1968 for the reporting period ending the prior calendar year, or December 31st, 1967. And the first unclaimed funds reports that were due in Ohio from all other entities was in November of 1968, November 1st, and that was for the reporting period ending the prior fiscal year, which would have been June 30th of 1967. Chapter 169 of the Ohio Revised Code is what constitutes Ohio's unclaimed funds law. It's administered by the Department of Commerce, and the Division of Unclaimed Funds has primary responsibility for it. The Director of Commerce is Cheryl Maxfield. The accompanying administrative rules, which kind of flesh out the do's and don'ts and how to comply with Ohio unclaimed funds law, is found in Chapter 1301.10 of the Ohio Administrative Code. The purpose, the overarching purpose of Ohio's unclaimed fund law, and the division, whose responsibility it is to administer and enforce it, is simple. It's to reunite lost and forgotten funds with their rightful owner.
Thank you, Kelly. Reporting unclaimed funds is a four-step process. All businesses in Ohio that are located in Ohio or doing business in Ohio are required to report annually. Even if you have no unclaimed funds to report, you're required to file what we call a negative or a none report. The first step of the process is to review your accounts on an annual basis and go through your financial records looking for items that might be dormant. That means dormancy means the maximum amount of time that a particular kind of fund or unclaimed fund or item can be held by the company without any activity that's owner generated before it becomes potentially reportable to the Ohio Division of Unclaimed Funds. So step one is to go through and identify those. Step two is to do a due diligence mailing where you reach out and try to get in touch with the owner of that particular item. You send out a notice of unclaimed funds form or an equivalent letter with a self-addressed stamped envelope. If the owner of the funds sign that form and return it to you, that item's not unclaimed. You can either issue a refund check or hold that item for up to however long it's dormant. before it becomes dormant again, and then you might need to do another mailing. If they don't sign that and return it to you within 30 days, then that item becomes reportable. And so that moves us to step 3. So you have a couple of options for reporting. You can file electronically through the Ohio Business Gateway, or you can upload a NAPA format file through our upload site. NAPA stands for the National Association of Unclaimed Property Administrators. And if you'd like to learn more about that, you can visit our website at unclaimedfunds.ohio.gov and go to the reporting section. And then lastly, when you do submit the reports, payment is due at the time that you submit the reports. So if you file through the Ohio Business Gateway, you can send those funds to us through an ACH debit transfer or credit card. If you file through our upload site on our website, you can send us a check. Now, if you have no unclaimed funds, like we'll see on the next slide, then you are required to file what we call a negative or a none report, which the best way to file that is through the Ohio Business Gateway. So even if you have no unclaimed funds to report, you are required to report to us. And so there are instructions on how to do that through our website. And the deadlines for reporting is for life insurance companies is May 1st for anything dormant as of December 31st of that year. For all other companies, then the reporting deadline is November 1st for anything dormant as of June 30th of that year. Now, if you are approaching those deadlines and you find that you need some extra time, you can file for an extension. Go to the website on the next slide here. Fill that out. You can request 30 days, 60 days, 90 days, or 120 days. So long as you submit that by the reporting extension, and the deadline is coming up here for the November 1st deadline. So long as you submit that by November 1st, then you'll receive that extension. Now, if you're not sure if you need an extension or if you don't know for how long you should request, then we request going ahead and filing for the extension for 120 days, and that will give you time to complete your due diligence mailing and to complete the report and send that in to us. Sometimes with the Ohio Business Gateway, when you're first registering, or if you are returning, if you haven't filed in a while, sometimes it takes a little bit of time. So we do recommend requesting that extension if you're not sure. Now, if you don't file, however, there are some consequences. You may be selected for an audit, and that's governed by the Ohio Revised Code 169.03, Section G, Section 1. And if you receive a letter notifying you that you're being audited, it is legitimate and it is not voluntary. So we may have our field auditors come in and examine your books to let you know what you need to report and give you instructions on how to do that. Or you may be contacted by one of our contract auditors. Now, also, you may be assessed fines and penalties of up to $500 per day for each day for not filing the report or not cooperating with the audit. And that's given by Ohio Revised Code 169.12 and Ohio Revised Code 169.99. And many of you are probably doing the math and realizing that the fines and penalties can rack up pretty quickly there. But we do have something that can definitely help you out. It's called our Voluntary Compliance Agreement Program, and Rhonda is going to tell you all about that.
Hello, my name is Rhonda. I'm going to go over some of the basic voluntary compliance program information. Please be patient and bear with me. This is my first webinar, and on top of that, I'm battling a cold. So the voluntary compliance program is an agreement between the division and the business in order to bring that business into compliance with the unclaimed funds filing requirement. We are aware that not all businesses are aware of the law, therefore they have never filed. This is a way to lump sum filing, if you will, the last 10 years of non-filing. To qualify, the business cannot currently be under audit by the division or any of our third-party contract auditors. Also, let me go there, sorry. Also, the company agrees to perform a self-examination of their records to identify any possible reportable funds. Examples include uncashed payroll checks, credit refund checks, commission checks, checking savings accounts, or any other dormant checks or aging accounts. We have a complete list of possible account types and their dormancy periods on the website under the Identifying Inactive Account section. For items over $50, as George mentioned, you will be required to send a due diligence letter. If the item is over $1,000, the notice must be sent via certified mail. In this case, the company can deduct the cost of the certified mailing up to $20 from the account submitted. Companies can be relieved of the certified mailing requirement if they show that the last known address is not accurate or missing. The required due diligence mailing should include a self-addressed stamped envelope, and the owner has 30 days to respond to the mailing. If no response is received, the company can then remit the funds to the division. We do have available an OUF to use, which can be downloaded from our website. Excuse me. There are 3 estimation techniques that can be utilized for those periods for which records are not available. Kelly can probably explain these more than me, so you can ask her when she comes back on. The asset method, the sales method, or any other estimation technique mutually agreed upon between the division and the holder. Once you have identified all the outstanding accounts and have completed the due diligence process, you then should know the exact amount you will be reporting. This is very important because the amount on the agreement cannot be modified once the agreement is approved and signed. If you have nothing to report, then the voluntary compliance program is not an option. You would just file a negative report for that year and stay in compliance for the following years. Next slide. The benefits of entering into the agreement are, 1, that the holder is relieved of further responsibility for the safekeeping of the funds. Whoever knowingly violates the unclaimed funds filing requirement is subject to fines and penalties. This agreement protects the business from the possible fines and penalties based on the specified items submitted. Another benefit would be knowing your business is in compliance and up to date, making the following years easier to compile and submit their annual report. And last, the division will less likely audit the company who entered into the program voluntarily, as long as that business stays in compliance and files their yearly report by the November 1st deadline. Next. I think that's it for that one. Susie, you can go to the next one. Okay, and then you can visit our website at unclaimedfunds.ohio.gov. Go to the Report Funds section to download the Voluntary Compliance Agreement. Or you can email us your request at unfdcompliance@com.ohio.gov, and we will email you the agreement along with instructions. Complete all the necessary items in the agreement and forward to our office via email or regular mail. Legal will review the agreement and either approve or deny the request. Once it has been approved, we will send you the signed copy, and from there you will have 60 days to send the report along with payment to our office for processing. And with that, I will hand it back over to Kelly to go over the actual agreement and the required information.
Thank you, Rhonda. So we have shared a fair amount with you about the process and the program, and I want to talk to you about the particulars of the Voluntary Compliance Agreement. First, recognize there are a variety of different types of unclaimed funds. There's miscellaneous checks, refund amounts, payroll, escrow funds. It's important that you examine your books and records to identify those categories of funds you may be holding that belong to your customers or business partners and include them in the scope of the voluntary compliance agreement. For instance, reporting all of your general ledger debt does nothing to bring your company into compliance regarding any securities liabilities. Identifying unclaimed funds by type is important, as is identifying the last known date of activity and providing all owner identifying information. These are all critical elements of your reporting obligation because once unclaimed funds are reported and remitted, the holder is relieved of all of its record-keeping responsibilities. So the more information reported, the better equipped the division is to reunite these funds with their rightful owners. Secondly, the voluntary compliance agreement is not a product of negotiation. It is the result of a program. It is a program with a standardized agreement. I want to draw your attention to what you see on the screen here, which is the voluntary compliance agreement. And on paragraph 1, you're going to notice the important caveat to eligibility, and that is you cannot currently be under audit or noticed that you are going to be under audit. And the reason for this exclusion is obvious. The voluntary compliance program is meant to bring holders into compliance in a time and cost efficient manner, but it is not to be used to defeat the audit process, which is another enforcement mechanism that the division is authorized to use to ensure compliance with Ohio's unclaimed funds law. Next, I want you to take a look at paragraph 4. This is important because every holder, including those holders that enter into a voluntary compliance agreement, must engage in what's called due diligence. It is one last attempt to make contact with the owner. And this attempt to make contact with the owner must be done at least 30 days prior to the date on which you actually report and remit unclaimed funds to the division. If you sign the voluntary compliance agreement and report and remit funds, and subsequently that unclaimed fund owner comes forward months later, for instance, and wants to recover those funds from you, you can refer them to the division where they can recover their funds by simply submitting a claim. They will then receive the principal amount you reported and any interest that has accrued on those funds while in the custody of the division. If instead you choose to pay out the funds to which the owner was entitled, you too can submit a request to the division for reimbursement of those funds you have paid out to the reported owner. You simply provide us with proof of payment to the owner, and we will reimburse you for the amount you reported as unclaimed funds to the division. Rhonda had mentioned this earlier, but I will mention it again. Paragraph 9 of the voluntary compliance agreement, it's addressing the provisions that are the protection or the consideration that is offered holders who report and remit funds to the division. It results in relieving you of your record-keeping responsibility, and then you are held harmless for those funds that you've reported and remitted to us from any further liability based upon those funds. I encourage you to look at Revised Code Section 169.07 if you want particular information regarding the hold harmless provisions that are afforded holders. And with that, I will turn it over to George Gladden, our compliance manager.
Thank you, Kelly. Okay, so this next slide, it's a set of useful websites. Here we go. We've got some questions about where to find all this information. If you go to unclaimedfunds.ohio.gov, we also have the QR code that will point you there. If you click on report funds on the side, on the next screen, you'll be able to click on voluntary compliance agreement, and all this information will be there. You can download the actual agreement and some other information as well. And then you can send those in to repeat we had a question to repeat the email address. You can send those to UNFD compliance, that's all one word, at com.ohio.gov, Ohio spelled out. Now, if you're curious to see if you have any missing funds out there or unclaimed funds out there, go to missingmoney.com. type in your name, and if anything comes up, you can download a claim form and start the claim process. To report on the Ohio Business Gateway, go to gateway.ohio.gov. You'll need to complete your report first. So in order to be able to upload anything, occasionally, if you go there, you may not see the unclaimed fund transactions for the reports. We have instructions and a video on our website on how to add those. So I recommend visiting our website too. And if you have any other questions about unclaimed funds, you can visit the National Association of Unclaimed Property Administrators at unclaimed.org. So at this point, it looks like we do have some time for questions. There's our contact information if you do have questions after the webinar. You can feel free to reach out to us at any time by phone or by email.
Okay. Thanks, everyone. Let's take a look at the questions that we've got in. How about if you have a none report to submit? Is there somewhere on our website that you can file and submit the none report?
Yes, actually, there is. You can upload a NAPA format, text format file with no property, and we will accept that as your none report. You can go through the upload site on our website, which you can find on unclaimedfunds.ohio.gov under the reporting report funds, and then click on create an unclaimed fund report, and there's a link on the that page there.
Okay, so for businesses who are having difficulty with the Ohio Business Gateway, would it be better to request paper forms for a none report or submit a none report on our website?
I recommend going to our website. There's a wealth of information there. There's some troubleshooting there for uploading your report or reporting through the Ohio Business Gateway. I also recommend that you reach out to us, and we might be able to help you navigate those difficulties. The reason I suggest that is that we are moving toward electronic reporting over the next few years. And so it's better to go ahead and get signed up to be able to file electronically.
It sounds like we have a lot of folks wanting to file those none reports. Is there any consequences for not filing a none report?
Yes, there are. There is a penalty of a fine of a civil penalty of $500 each day that you act in violation of your duty to file a report, whether it be a none report or a sum report. That is an obligation for knowingly failing to submit a report or perform any of your duties required under Chapter 169. Please appreciate, even though it's a none report, the reason that the annual report is required is to show that you've done your due diligence, that you've examined your books and records and identified funds that belong to another, or you've identified no funds. But the purpose of the annual reporting requirement is to ensure that you're making that check, that you're reviewing your books and records, and that you're tracking and identifying those funds in which you or your business have no ownership interest.
Okay, we're getting more questions in about how long does it take for the approval time after we submit a compliance agreement?
Rhonda, would you like to take this one?
I'm sorry, can you repeat that?
About how long does the approval time take after they submit a compliance agreement?
The turnaround is fairly quick. As soon as I get the agreement, I'll go over it, and then I will send it to Kelly for approval. I would say 2 weeks max, unless she's super busy. Then may take a little long, but it's really not that long of a wait time.
Great. So here's a good question. So does the information in this webinar apply to businesses who owe money to others or who themselves are owed money, or both?
It applies to businesses that are holding funds on behalf of their employees or their clients or customers, that is lost or forgotten. That's become dormant. It's inactive, and so it's their reporting responsibility. So it doesn't apply to if those same customers happen to owe them money. Kelly, did you want to chime in?
I think that this question might be trying to get to the business-to-business exemption, which there is a business-to-business exemption in Ohio unclaimed funds law, but there are certain evidentiary requirements that you must be able to satisfy in order to avail yourself of that exemption. And I can certainly, on the side, I can provide you with whatever supporting information that you need. But I think George also answered those categories of funds that may still be reportable even if they are between businesses. But there is a business-to-business exemption. However, there is certain evidentiary requirements that you need to be able to provide documentation to support that you're eligible for that exemption.
Okay. For negative reports, how far back should you file?
If you've never filed a negative report and you're just getting started, you should take a look back 10, well, we request at least 10 years for the agreement, but take a look back to see if you have anything that you might be holding that's within that 10-year period, or really anything that even is older than that. You can go ahead and file that and report that to us. But if you have nothing to report, you don't have to go back and file each of those years. You can start this year and then continue to report every year afterwards.
Okay, here's another one. So I want to make sure I'm understanding for a negative report, they are not eligible for the VCA. What if they have not filed for years? Will this catch them up and eliminate the $500 per day fine, or does every year need to be reported?
Fines are not assessed automatically, so it's on a kind of a case-by-case basis. And we do take into consideration those companies that have never filed before. If they start filing their non-report, then we take a look at that. It's not automatic. You do not need to go back and file the last 10, 20 years worth of non-reports. I do encourage you, though, if you do have property to report, to go ahead and enter into that voluntary compliance agreement, so that there is protection. If there was property that you should have reported many years ago, those are still eligible for those fines and penalties. So I recommend that you reach out to us and take a look at that voluntary compliance agreement.
Great. If you didn't know about the law and file a none report before November 1st, is there anything else that I need to do for the past, which would be a none report for each of those past years?
So long as you have done a search of your financial records for anything that might be dormant, and you've for those items that you've completed the due diligence mailing, and you've filed your none report, there's nothing more that you need to do for 2023. You don't need to go back and take a look at those prior years. If you haven't done any of those steps, I recommend you are permitted to submit a supplementary report. So if you're not sure, I recommend requesting the extension and then completing all of the steps. And then if you do happen to find something that should have been reported, you can enter into a voluntary compliance agreement or go ahead and report those within the length of the extension that you requested.
Okay, we're going to go ahead. It is 1:30, and I'd like to go ahead and answer a few more of these questions. If you can no longer continue the webinar, we understand. Feel free to take down our contact information and send us an email with your questions. We will be posting this webinar, the slide deck, and the questions afterwards on our website. So the next question we have is, can the compliance request be submitted at any time throughout the year?
Yes, you can. You can request to enter into the voluntary compliance agreement at any time in the year. You will just have, after the agreement is received and approved, you will have 60 days to submit that report on that agreement.
Okay, so we're just having some similar questions here being posted. Do you only need to send the OUF-8 notice letter on accounts that are over $50 or for any money unclaimed?
You only need to send out the due diligence mailing, the OUF-8s, on items $50 or more. That's required by law. Anything less than $50, you may send those out, but it's not required by law.
Okay. Given the due date is so close, if you've never reported before, should you do the compliance agreement first or file an extension? Great question.
You should go ahead and file the extension.
Will all businesses on Ohio Business Gateway have an unclaimed funds link to report? So I know you will have to add the unclaimed funds report to your dashboard. Is that correct, George? I believe that's correct.
The folks over at the Ohio Business Gateway, they're a separate department, but they assure me that anybody that creates a new account should have those unclaimed fund transactions on their dashboard. However, prior accounts that have already been in existence may not have those. So it's a pretty simple 3-step process to add those transactions, and I recommend taking a look at our website at that video.
And can I submit a zero report or none report anytime during the year?
We don't start processing reports for the November 1st deadline until after July 1st. So you should wait until July 1st to submit that report for that year. In the same way for life insurance companies, we don't start processing those until after January 1st or until after January 1st of that year.
And just to add my 2 cents to that, the reason for that being is that the reporting period for the majority of unclaimed fund holders is going to be the fiscal year, which starts July 1st and ends on June 30th each year. And for that reason, then the reporting deadline is 5 months thereafter in November. And for life insurance companies, however, it's by calendar year. And for that reason, their reporting deadline is 5 months thereafter in May. So that's the reason for the difference. And so when you submit your reporting, we're asking you to do that on the basis of a fiscal year. So by November, you're reporting to us for those accounts that were dormant that are properly reportable as unclaimed funds as of June 30th of that prior year. In this case, for November of 23, it would be for everything dormant as of June 30th of 2023.
Okay, one more question here. In a previous question, it was indicated that there's no need to pursue a voluntary compliance agreement for failing to file non-reports in the past, but penalties are assessed anyway. Can you clarify?
Yes. So fines and penalties are not automatically assessed. It's on a case-by-case basis. So in an instance where we look at a company and they start filing a non-report, if they continue to file, we typically do not go back those several years and assess fines and penalties for all of those years that they may not have been reporting. However, the important word there is may. And so Kelly can speak to this probably better than I can.
And and I don't want to misrepresent this because I think I scared people earlier, George, when I was talking about the failure to report is when it triggers the ability of the division to assess that $500 a day penalty. But as a caveat, not only is it permissive on the part of the division to assess those penalties, but you have to knowingly fail to render a report. And from a lot of the questions here that are posted, we are dealing with a lot of holders who did not knowingly fail. They weren't aware of their annual obligation to report and remit unclaimed funds.
Okay, one more question for you, Kelly. Please elaborate on that business-to-business exemption that was mentioned.
There is an exemption in Ohio law for business-to-business exemptions. However, there is in our administrative code evidentiary requirements that you would have to show to substantiate that this was a business-to-business exemption. And in saying that, I'm saying just because you are holding unclaimed funds that are reported to belong to a business entity, that doesn't automatically result in the business-to-business exemption applying. It would depend